What's up, crypto junkies? Welcome to another video. Today we're going to do a recap of the week. What I've got here is Nathaniel Whitmore. If you don't follow him already, NLW is the @ symbol. Give him a follow. He's really great for like weekly recaps. He does really long threads on Twitter about what's going on in crypto. And hey, hint, hint, if you haven't already followed us, over 2,000 followers, give us a follow. I do post political stuff on here, so do the other moderators. There's strong opinions, so just understand that there's going to be strong opinions, and you might not agree with all of it, which I think is a good thing. I think it's challenging, but some people don't, and they really don't like it. It's definitely not a place to go for just bubbly crypto content, okay? This week, there is 30 tweets for this last one. And man, I was reading through this like before I flicked on the camera to see like, man, what do I cover? Where do I go with this? We're gonna cover through about half. And then I got a dedicated video talking more about China and China's move into digital currency, People's Republic, People's Bank of China holding over 60 patents. We're going to talk about all that. But let's do some headline hunting here first. The Bank of Japan's deputy governor believes that central bank issued digital currencies cannot be economic tools since fiat currency is still popular. Here's the funny thing. At the end of the day, what separates fiat from crypto? It's consensus. Fiat's been around longer, it's more trusted, the value is put into it and given to it by the people. So because we use it, it has value, but there's nothing backing it. The reason why it hasn't switched to a digital currency yet is because they don't want it to. They don't want to pull the plug just yet, but the evidence is becoming more and more every day. The writing is on the wall in terms of the debt problem that the US has, but not only that, but the entire world has, and moving to a digital means makes sense. The thing you have to keep in mind is that if they don't just try and pivot digital, which is like a really small stepping stone, I think, like fiat to digital, like, come on. And it's all state backed. So if they don't do that and they do something that's more extreme, every other fiat up until the version that we have now, which was essentially switched over in 1971 by Nixon, if we did a more dramatic auditing process, they would find that the US has a very low amount of assets to back. And there's no gold behind the dollar. There's no silver behind the dollar, hasn't been since 71. So what would then, it would become like a round robin of assets. And then those assets would be used up and leveraged like rehypothecation to get new funds to come in. And that's what would be used to leverage to actually make a state-backed currency. But if they kind of pivot it now in the next couple of years and they don't allow it to collapse and kind of force that whole disaster, then I think they'd get away with it without having to do a full audit. Maybe they do want an audit, I don't know, but my assumption is that they don't, because then also too, the real amount of fiat currency that they've printed would have to become transparent. And I think that they've printed more than there actually is, more than they're claiming in circulation. And I think our debt number is off, because I find numbers of 21 trillion and I hear numbers all the way up to 25 trillion. So there's like a $4 trillion gap. That's a pretty big gap. Anyway, enough about US politics stuff. You can check out other videos we've got on this channel and our Crypto J channel, which that name will be changing soon. You can check out more videos on global economy there, but very interesting scenario. So my point with this is that the only reason why, like this guy can say this all day, every bank can say this all day because it's true. They just haven't decided that we're going to move on this yet. When they make that decision, they're going to stop the negative crypto FUD. They're going to start positive FUD and start reinforcing why you want to do this, why it's more safe, why it's more secure, why it's more modern, whatever they have to do to market that, then they'll start doing it. Okay, and that's how it works. Ripple ends the week as one of the biggest gainers, 15% growth. They had a ton of great news this last week. Some information about Rich List, which who cares? We're still in the 6,500 zone, just over 200 billion market cap on Bitcoin. I didn't realize when I shot the video earlier this week that Fidelity coming into crypto was like some of the biggest news ever, which it kind of makes sense that it is. I also didn't know that it was the third largest asset manager in the world, actually. So the fact that they're going to have 3 specific offerings is a big deal. So these are the 3 primary services that they'll be offering: an enterprise custody solution and Vault for Bitcoin, Ether, and other digital assets, which should be immediately competitive with BitGo, Coinbase, and Zappo. A trade execution service that routes orders at the lowest available prices. Sounds simple, obvious, but this has been a major holdup for brokers working with crypto, given the market's fragmented liquidity. White glove client services for institutions new to the game. That makes sense. I mean, it's Fidelity. So they're in talks with a lot of different people, but the Goldman Sachs team or CEO just went in with Mike Novogratz on a BitGo investment this week. So that is a competitor to Fidelity. So I don't think that Goldman will be using Fidelity per se. I think that they're going to try and build out BitGo actually. So everyone's kind of carving out their position in the sand. And just by, one person investing into, let's say, BitGo doesn't mean that they wouldn't turn around and use Fidelity, which some people think that might be like hypocritical or something, but it really makes total sense. They want to be playing both sides. That way they're always going to win. So the next thing that I wanted to talk about, which was interesting, and this slipped through me earlier in the week when I shot this video. Look at this. This is now 8 days old. Is that the same day Fidelity made this announcement into crypto, they published this article, which is a deep dive into digital cash assets. Well, not really. They're missing quite a bit. There was a lot of action that happened in the 90s, the late 90s, and then the early 2000s up to like 2006. Bitcoin came around in 2009, and none of those are mentioned. I mean, there was even digital currency events going on in 2005, 2006, and I believe it was 2006 is when the FBI stepped in and a bunch of international organizations stepped in and shut everyone down overnight. And that's when they realized that, hey, this centralization is what caused this, and that's probably not a good thing. And I believe that was the birth, or partially the birth, of a decentralized cryptocurrency. Pretty phenomenal, right? Give this a read. It's definitely enlightening. Like, I had no idea that DigiCash was created in 1989, and that obviously it's not the DigiCash everyone knows today, but it's very interesting. Electronic money that developed the same kinds of cryptographic protocols, public key cryptography. I'll leave that up on the screen for you for just a sec. Go ahead, give that a read. All these links will be underneath the video too, if you want to check them out. All right, so let's make sure I'm following this along. Yes, we covered those 3 things I wanted to cover. Fidelity, blah, blah, blah. Yep. Novogratz and Goldman Sachs going in on BitGo. We talked about that earlier in the week. And I think that that's an important point. And that's where we get into this next long thread of Caitlin Long, is that you have a lot of Bitcoin maximalists arguing that, hey, people want control of their keys. People want control of their money. Not everyone does, actually. Not everyone really cares. So the conversation of custody, there we go, and holding with yourself or a broker dealer is a very important topic, and I think there's room for both. Like, let's not be overly dramatic here. There's room for both, and this thread explores that by Caitlin Long. I read this earlier in the week, and I think my ADD was kicking a little too hard, so I didn't actually solidify this into a video. Let's kind of breeze through some of this. The most significant news, maybe most important news to date on the Wall Street front was right here: Zero Blockchain's token generation event, 1012, compliant STO and public Ethereum mainnet of true preferred stock issued by SEC registrant. I think that's one of the first. Or is it the first? So that's really good news. Their choice will keep Wall Street honest. Every owner can always withdraw their coins to their own wallet and directly own the property if they so choose. Along these lines, I can't wait for reviews, Fidelity, digital assets, as long as buy-side firm starting a crypto platform is likely to build one that is a lot safer for mom and pop investors than one built by a taxpayer-backed or federal-backed firm. Plus, digital assets has been mining for years, so understands honeypot risks better than Wall Street firms, which haven't faced the need to manage bearer assets in years, much less digital bearer assets. It's not a core skill set of Wall Street firms, which I would agree with that. I think overall, there's going to be a demand for both. And I think that allowing like this kind of perfect blend of we'll hold on to it for you, but you can pull it out anytime you want, I think that does have its benefits as long as the whole platform itself can be trusted and the whole platform itself is secured. However they're planning on doing that, then you can trust and believe in that. But understand, like, the risk falls on them. So as long as they're insured and they're run through the proper channels with the United States, then I don't see that as being a problem. This goes much further than backed. Okay, so for collateral, draw your own conclusions. Sorry, I'm kind of skimming through here. And also too, like, you got to understand, I read so much and then I kind of forget what I've read when I flick on the camera. I'll leave this here, 13 post thread, let you finish up those last few. So at least I feel like the conversation is getting way more intelligent, okay? So what that means is the market sophistication level is getting more intelligent, because the fact that somebody can put together a 30 thread tweet storm like this and a 13 thread tweet storm like Caitlin did, and people still follow along and they can read it, just proves that it's going up. The intelligence level is going up, but also too, the level of conversation is going up. because we have to start asking more specific questions, and we have to start drilling in deeper, especially if Bitcoin is to be taken serious, if cryptocurrency is to be taken serious. Okay, let's jump into the next one. Number 7. Big conversation of the week is obviously the FUD around US dollar Tether. I think this is a combination of stuff. This is a combination of them moving around money and cold wallet, hot wallets, balances going up, down. Nobody on that camp and that team really communicating with people. That mixed with the rocky already banking that's been going on with Bitfinex has led to the FUD. And you got to understand that other stable coins, they're probably playing into this as well, because it's in their best interest to, because they want more people to use their stable coins. All right. I do want to point out this though. So we're going to skip ahead. So this is all just 3 threads on US dollar Tether, which I think we've covered till blue in the face. So this chart here shows, hey, it turns out that the balance is going down. So we might actually, Tether might actually be exiting and nobody really notices it. I don't think so. So they've retired 600 million worth of Tether over the last 9 days. So because of this, there's been some weird stuff going on. Here it is right here. So Lawmaster, which I've quoted and referenced before in videos, Larry Cermak. I didn't really notice this, and then Mike Dudas are both going after Whale Panda and Whale Pool and just making kind of obnoxious claims. But there's drama going on, and it all started with the Tether stuff because Whale Pool and Whale Panda seem to be reporting on stablecoins much more unbiasedly than these two, and then it led to a massive tweet battle. Like, look at this, going on over the last couple days now. So I believe now that it's completely done and over with. But yeah, so a little bit of Twitter drama for you. But Whale Pool and Whale Panda, I do follow as well. And I trust them for the research and information that they give. So anyway, just know that. And it's not like the bias or the agenda of Whale Panda and Whale Pool, but they brought up some great points about both Mike and Larry and how they haven't been covering things completely unbiased. So I don't know what that means. I don't know if that was just a mistake, an error, or if they actually are. Some people have claimed that they're CIA shills that are infiltrating crypto for the gain of the, New York Wall Street. And I do believe that there are people here with the sole intention in crypto to FUD things around, and with the sole intention of the New York Wall Street giants. And that is their full agenda. Okay. All right. I got a bunch of China stuff. We're going to shoot a solo video on that. A few weeks ago, Alex Kruger. Yeah, I like him. He predicted weaponized FUD a few weeks ago, in the interest of competing stablecoins. I believe that did come true. Okay, here's the China stuff. Conversation if Facebook were to launch its own cryptocurrency, which they already kind of did. I believe they did to leverage all the apps on their platform, didn't they? They allowed some sort of automated prepaid type thing, so that with Farmville and this I thought was years ago with all the explosion of the games on their platform, that they were gonna allow some sort of expedited checkout process with, micro purchases inside of games. I thought it was under their own sort of thing, their own sort of payment processor, but maybe I was wrong. And I've been off Facebook personally for 2 years, and I have no clue what's going on with Facebook, so I don't really care. But it would be interesting because I do believe that their platform still is super relevant. I believe it's dying now because of the games and the bullshit that they're playing. But it's like, Twitter, YouTube, Facebook are all playing the same game, but it's like, no, you can't go anywhere else right now. So until bigger, more decentralized, more freedom of expression platforms come out, stuck with what you got. I think that they would grab up a huge amount of market share. It'd be a good play for them to do right now, especially on the way out for a money grab if they're thinking that it's that dire of a situation. Pompey did a podcast talking about how mining hardware costs are now up 27% for Americans because it's China-based and trade tariff wars. Okay, so a lot of U.S. farms might be relocating, which I don't think there are a lot of U.S. farms anyways. I think most of the U.S. residents who set up mining farms did them in other countries. But if there were, trade tariffs affect you guys very, very negatively. So you're probably looking at different solutions. And now let's get into some of the stuff that I haven't read, but I want to cover a few more and then we'll wrap it up. I haven't read this piece or this, and I want to read all 3. So I suggest you do as well. And then if you want to see price action, this sky's belief, but I've seen this echoed over and over again. We've got a 4,500 to 5,200 range that people are calling for, and some people still calling for 2,800 to 3,200. Okay, so that's what you're looking at with BTC price analysis, and here's why. Here's the full breakdown for him, so you can jump into that thread if you want to see that. But longer, more fundamental posts starting to really explore these different topics are popping up all over the place. and it's just a shame that I don't have enough time to like dive into these and then, you know, give my feedback and analysis on it, because I think that a lot of these articles are written by a certain personality type, and sometimes it's easy to understand, sometimes it's not. And I think it's really, really valuable that we take these as people in the crypto community and we talk about them and we, you know, show them off, and so that then more people read them, more people are talking about it, and it elevates the level of conversation. That's really how we fix this thing. That's really how we change this. So those are the 3 pieces that I haven't read that I want to, but this is 30 posts long. So you see we are only at 15 here. There's another 15 that you can go through exploring. A lot of that gets into more obscure topics, definitely not so down the middle like a lot of this was. All the links, as usual, will be underneath the video. Check it out. If you could, just take a second, click the like button. It does so much for these videos. Gets us out in the algorithms, gets more people seeing them, and it gets more of our subscribers seeing them. And I would really, truly appreciate that. If you're here for the first time and you want more, click the subscribe button, click the bell notification. Keep an eye out, because we upload 1 to 2 videos every single day on crypto news, my friends. There's that much going on right now that we can't miss a beat with this, and we got to stay on top of this, so that we share with you, you share with, you know, the talking points with your friends and your friends and your friends and your friends, and that's how adoption happens. That's how we grow this thing. So we do this together, my friends, like usual. And any additional information you need, you want to follow us along on social media, that will be there as well. All right, my friends, see ya.